Hello and welcome everyone to another weekly market commentary from StashAway. With us again, our Chief Investment Officer, Freddy Lim.
Hi there.
Hey Freddy, good to have you back. Another week, another market update. We have a lot of questions from last week that we want to get to right today. So we'll mostly focus this video on the questions from our listeners. But I do want to get a quick update from you on, the market, what happened since last week, and kind of also where is what is the virus situation across the globe right now?
Right. I think in a summary, the news headline says that last week was the biggest weekly gain since 1932 or 33.
Yeah.
I mean, people like that kind of stats. I do not make much of it. I'm just thinking that we continue to monitor incoming leading indices, incoming data, right? We remain in a watchful mode.
Yeah.
But we remain. We also want to remind ourselves of our long-term goals.
Yes.
Right. So that those things remains unchanged. Other than that, it's pretty boring. It's all about the virus counts.
Yes.
And
virus counts and how long everyone is closed, right? This is what everyone is focusing on right now, right?
Well, we share our, how would you put it? We share our concerns with what's happening in the US now.
Yeah.
The cases are really spiraling, and I think they rank number one now.
Yeah.
And I think China is half of the US numbers.
Yeah. I think there's very low new cases as well, right?
That's right. So we continue to observe what's happening in the US, and by the data that we've seen from China and other places, not assuming that they will manage the same way as China, but just looking at the stats, we are still in a period of a more spiral in the pipeline in terms of infections. So wouldn't be surprised, and Mr. Trump, the President Trump himself have said that the next 2 weeks is going to be horrible, right? So we expect that to continue to be the case, and it will be a total of 5 weeks from lockdown before the peak can be observed, if you believe that we manage it like China.
Yeah.
Right. So other than that, the news has been just they've been not focused on any other things.
No, I think that's the only thing they're focusing on, right?
Yes.
And I think perhaps the markets are even looking, more futurist in the future. If once they find that point of say, hey, we're going to be able to open up, we see flattening curves across the world, right? I think that will be a huge driver for this, right?
Yes, I would say that a halt in activity is zero output right now. You have this time gap in this graph where there's zero output, but then this income loss is now being replaced by all the policy bazookas. I think the governments are already talking about more.
Yeah.
So the House, Senate, even separately the Democrats talking about 2 more bills in the pipeline. And if you think about it, if you have to lock down 3 months in a year to fight this virus, and the US is $19.5 trillion economy, your stimulus package will need to be $4 to $5 trillion. So we are now hitting at 2, and they are talking about 2 more bills.
That roughly get to the 4, I think.
Trump already had this proposal on infrastructure spending, $2 trillion. They obviously need it. The infrastructure is so old in the US. That's why this virus, you see the results here, right? So
and hopefully that's a lesson, right? They take away from this as well.
So I think the $2 trillion spending to that is a very I think that's a very, very good plan. That separately Democrats have their own plans on helping consumers more directly. So in summary, yes, there's a lot of negatives, but there's also a lot of silver linings.
Yeah. Thank you, Freddy. I think this already answers almost the question number 1 from EY Ong that we got, because he was asking, he was actually outlining the situation exactly like you just did, right? Hey, in China, the playbook ran like this, right? From, in mid-Feb, in middle of February, it was really bad. Markets didn't care, created new highs, right? Only now that it's in Europe and the US, and it seems to be getting worse than China, just because of the measures taken, maybe took too long. Also, different system of how the countries are run, right? And how effective they are at actually quarantining people. Do you think now that it's pretty much already set before April 30th, nothing is going to happen opening up, right? They just removed it from Easter to April 30th. There's going to be any more market downturns because of that?
If I have to make a point, I think we are in a stalemate. the bulls and bears are fighting.
Yes.
Well, because the bazookas are coming in and more bazookas are being planned, not just on the government spending side or infrastructure bills, we have central bank who can do virtually unlimited amount of buying and selling, right? They can monetize those debts. So we used to call it MMT, the theory, modern monetary theory.
Yes.
It doesn't look far-fetched now in unprecedented times, but also there's another word for it. It's called helicopter money, right? Universal basic income and all.
Yep.
I mean, you wouldn't be surprised that some form of drastic measure may come. So in a way, we are in a stalemate because we're trying to just replace lost output, right? But some casualty will still remain from halting activities. So the path will not be a V, could be a multi-V, could be a U. We don't know how we're going to get there, but the final destination is clear. The final destination is that we're going to go back to the original trajectory, but the path of getting there is what we're all trying to decipher now. And at StashAway as well, we're monitoring incoming data, not just economics, but leading. We're looking at valuations of asset classes, how much of those prices in those assets, how much are they saying about what kind of recession is the market expecting? And if it's severe enough, there's nothing to do. If it's not severe enough, be stand sure that ERA will re-optimize portfolio when necessary. So at the moment, we are in a stalemate observatory situations. Yes.
And no need to rush things there, right? So it's like you said, also let numbers speak for themselves, right? Thanks, Freddy. I hope for Mr. Ong this will be a good good answer. Another question we got, and I think I got it from some friends who are clients as well. This one is from Michelle Ling, and she's asking, what would be your suggestion on adjusting the investment split between the different risk profiles? Let's say, for example, I have a low risk, medium risk, and a high risk portfolio normally, and I put money across these. Should I now maybe put it all into the high risk because that is the one that is maybe the most impacted one, right? And then move it back into that one? Or what would be your suggestion there?
The question is a very understandable one, so I will address it head on, and I'll tell you my final answer. If you, it involves market timing, because you're inevitably making a statement that I think this is the bottom, and I am going to now move from a low risk and balanced risk to the highest risk portfolio to capitalize, to make full use of the cheaper valuations on the global stock markets, right? So if that's a view-driven perspective, and if you get it right, yes, you will get rewarded for making that call, but if you get it wrong, it does hurt you more. And so it's a matter of opinion here. In principle, my answer would be, when you sign up on StashAway's app, we have this process of determining the risk profile. Your risk profile is your ultimate true answer for what you should really be in the long term, medium and long term. And your plan shouldn't really change because of market conditions in the next few months or quarters, right? You should always be focusing on saving. Invest those savings into a risk profile that you have selected, right? And just stay with it for the long term. I mean, that really is what I believe should be the answer. But there are people among us who knew markets better and would like to take a view. Then it does sound intelligent to be switching portfolio risk points.
Especially if you have maybe 3 portfolios anyways, you might want to do that. But again, I think the baseline should be what you just said. Hey, really talk about, and I know we stress this every single time here, right? But it's so important to look at the goals. Be true to yourself with your goals, right? And stick to them, because that will work out in the long term.
I have one more point to make, which will tell you it doesn't matter. Because the policy bazookas came in such a big way, and the central banks are going to conduct many more quantitative easings. Basically, they buy bonds. It doesn't mean that when the market goes back up, the bond will do poorly. I mean, because there's a lot of buying on everything under the sun. So in a way, sticking to the risk level that you have selected doesn't mean you may miss out on a big stock market recovery, because the bond side is actually the pillar of the bond. You have to stay low first. you will get those positive return from the bond side as well,
Yeah.
right? For the stock market to do well here, they are both friends going forward. I mean, this is unprecedented times, and the usual negative correlation between bonds and stocks, they will break down.
Yeah.
As we have seen in 2008 crisis, post QE, they both move together.
Correct.
Right? So in a way, it makes the question sort of redundant in the sense that it didn't matter whether you have more bonds or stocks.
Yeah.
Yeah.
No, I think very, very, very good summary of that.
That's my market driven opinion.
Yes, and hopefully Michelle will get to see this video and get your opinion on that as well. I think she will be happy with that. Thank you, Freddy, for all of this. Really helpful, and we'll obviously be back next week to do some more. But I wanted to just mention a few things. So we're going to have a couple of webinars next week in Singapore as well as in Malaysia. And in Singapore, we have it on April 8th. It's going to be an inside look into StashAway, about our app. You can ask any kinds of questions you have to us during the webinar as well. We'll address all of them. So that is on April 8th. That's a live webinar. You can sign up on the links below. And on April 9th in Malaysia, we're going to have a live webinar about personal finance basics. So if you want to learn more about budgeting, saving, goal setting, and things like that, you can sign up again also in one of the links below the video or on our website or Eventbrite page as well. I hope you enjoyed this video once again. Freddy and myself will be back soon. And otherwise, have a wonderful week. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.